This is Robert Harper with Virginia Farm Bureau's Grain Division. Glad to bring you the Merchandiser Minute today for Friday, June the 4th, 2021. At the end of another eventful week on the futures board and on the weather maps as well. It's so great to hear from many of you this week who receive significant amounts of rain over the weekend and through Sunday, and then even some of you today and yesterday. So we're thankful for that very much. And let's take a look at something else we're thankful for, some positive price action on the futures board this week in Chicago. This week was another choppy week. We had lots of ups and lots of downs. We know we've got a lot of influences right now on your futures part of your cash price. We've got a lot of outside money that's still flowing into these futures markets, and we're going to continue to see volatility. And you're going to continue to see wide ranges during each session, especially in the night session. One thing to note, we are seeing lower volumes right now of future contracts trading, especially in the night session. And Thursday was a good example yesterday of waking up in the morning and seeing all that green on the futures board and positive gains. And then when we had more volume come into the market, more influences come into the market after 9:30, we went down. So keep that in mind. Keep that in mind as we expect volatility in big ranges. December corn up 46 cents a bushel for the week to close near the high of the week at $5.91 a bushel. November soybeans up an impressive 63 cents a bushel this week to close right near the high of the week at $14.35. In July, wheat up 24 cents a bushel this week. Not near the highs for the week, but still an impressive move. 24 cents this week. July Chicago soft wheat to close at $6.87. When we came into the week, the Commitment of Traders report, we were showing the managed money speculator long 251,000 futures contracts of corn, long 92,000 futures contracts of soybeans, and short 40,000 futures contracts on the soft wheat, Chicago wheat. So we want to keep a look at that. Today's Commitment of Traders report will be available for all of us real soon, and we'll see what that price action took and looked like effective of Tuesday of this week. Remember, we did enter this week a new marketing year for wheat. It started on June the 1st. And we saw a lot of price action in wheat this week that was really going back and forth and dealing with weather. Weather was the main feature of our trade this week. And just take a look at the spring wheat country, North Dakota. Last weekend, much of the North Dakota spring wheat crop had 20-some degree, upper 20s, and in some cases mid-20 degree temperatures on that crop. And then we saw the forecast turn hot and dry across the Corn Belt, I should say hotter and drier across the Corn Belt for this week, as well into the northern plains. And some producers in North Dakota are looking to see temperatures reach near 100 degrees tomorrow. So big changes in temperature from one week to the next, and that definitely had an impact on how wheat traded this week. Let's see here. We're going to continue to keep our eye on that cyber attack, the ransomware attack this week against JBS. They had multiple plants shut down in the United States and elsewhere, but we're thankful that they're getting back up to normal. There's a lot written about that, and I think it underlines a lot of issues in the cattle industry and what's going on with the futures trade there as well as the cash trade. And I would encourage you to investigate that and check that out. A lot of you all are cattle producers, and I know you'll appreciate it. But multiple days this week, we've got lean hog futures trading higher than live cattle futures on the Chicago Board of Trade or the CME. So take a look at that, and there's some strangeness there. Something else that was of note this week in the Pacific Northwest, we saw corn buyers there go no bid this week for corn, old crop corn, really showcasing that they feel safe on the coverage that they need for old crop sales. And we know that when we see producers, processors, end users, whoever that might be, country elevators, anybody go no bid and pull their basis out of the market, a lot of times we see that make an impact on futures price. So we're going to keep our eye on that market, the Pacific Northwest, and see what really goes on out there in the coming weeks, as now they're saying we're covered. And that's a very different situation than even 6 weeks ago. We did get a bearish ethanol report this week. It was interesting. It caught the trade off guard by seeing a surge in stocks. Production, though, was very good ahead of the Memorial Day weekend. We saw, again, I think it's the fourth week in a row now of 1 million barrels per day production. And the numbers last week were right over 1 million barrels per day, and that equated to 104 million bushels of corn ground for ethanol. And that is, I think I got that number written down right, but I'm sure if I'm wrong on that number right here, that is the highest corn used for ethanol number in 14 months. So basically pre-COVID, so that's really good news. Let's take a look at some USDA numbers this week. We got our first crop conditions report for corn this week. The corn crop came in at 76%, good to excellent. That is very good. I'm told that's the third highest initial corn rating of the last 10 years. We saw export inspections basically come in as expected, and we saw on the sales side this week, corn come in above expectations on new sales for old and new crop, and soybeans and wheat come in as expected for sales. So positive there as well. Next week, we're going to continue to have weather as the feature. We know we've got 90 days here, June, July, and August, to determine the size of the North American crop. So weather is the main feature, and whether the Midwest forecast is hotter or drier or cooler and wetter will help dictate what the speculators and even the commercials will be doing on the futures board. Also, look next week for some speculators to be rolling out of the July futures contracts. That's going to be interesting to watch to see whether in corn, for example, if they roll into the September, if they skip September and just go straight to the December. We'll be watching for that price action next week. And you know, with the rain that we've received this week, it's been great having those conversations with you and seeing more producers at these really good price levels we're at right here for new crop, looking at what they have priced on their new crop bushels, looking at those percentages. And there have been folks who felt comfortable with pricing another small incremental sale as we try to sell into this rally and participate. So give Josie or I a call, and we can have a good long conversation about how much you've got priced and if you're ready to do some more on the new crop side. This is Robert at Virginia Farm Bureau's Grain Division.